Well, hello traders and investors. I'm LA Little and this is your weekly NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective, meaning each time we look at the markets, we ask ourselves where supply and demand is on the charts, and then we look for test of those areas. That's what gives us the clues as to what comes next. I do this show 5 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, and the weekly show tonight, same time, also stored on YouTube. It's under the channel LA Little. If you want to subscribe, anytime I push content, you get a notification, and you can do that by just reaching up in the right hand side of the screen there and hitting on subscribe. So let's take a look at what happened last week here. We had a pretty good bounce again. The Dow led the move. The NASDAQ still trailing. Most of that is still in the NDX, large cap tech, biotech, all that still having a hard time. Down 4% there, 3% on the Russell, and back to even elsewhere. Let's move to the charts. Starting here with the S&P 500, big bounce, underway, has been underway, continues to move up. Still doesn't want to give it up, right? All the way up. Had big volume on Friday. Of course, that was associated with the options expiration. If we move to the weekly chart, what's really happening here is a bearish retest regenerate. Now, if we go back to what had happened before, the first bearish retest regen was into this area, and that area would take you about 1993. Beyond that, there was this other area where we thought we would get enough resistance, that overlap. Well, it didn't happen. Now it's going all the way to the top, or at least trying to. Top of that's 2072. You're sitting at 52, so you're 20 points away. It's not that far, and we've already traveled 220 points, so it feels like it's nothing from here, another percent comparatively. But at the same time, right, I don't know if we're going to get there or not. We did just get over the breakdown bar. We got a swing point high up there, and this thing's shooting for the top of the range one more time. What I would like to point out to you is the symmetric nature of what has happened here on this weekly. You had the double bottom low here, the double bottom low there. At least that's what everybody calls them. If you're a classical TA guy and you go back to the Edwards and McGee, this one might be a double bottom. This one a little bit more, it's a little closer. Some would question that. In neoclassical, this was a test of a low, right? So it tests that swing point low. Actually, it wasn't a swing point low. It tests the low, has a little less volume. You don't find new sellers at the low. That tends to give you a reversal. It actually did a hammer too, pushes back the other way, and you end up getting a big rally off of it. Now, going back to the symmetrical nature of this, you've got those lows, right? Same sort of consolidation at the lows, and then what happens out of both of those? You get the nice big spike up, and you have it here as well. And so that spike up, as it comes up, right, eventually sets up some sort of a high. Whether it's going to be last week's bar or some other one, it's going to do the same sort of thing. Then you get a big down week. And then in this case, it reversed the very next week. You end up going 5 to 6 weeks sideways. Eventually, you can't get over it, and you finally give it all up again. We're at that point where we're probably going to get some sort of reversal pretty soon. And when we get it, the question will be do they pop it straight back up? Do they consolidate a little bit, and then make the move? However it's going to be, given the strength of the trends, the underlying trends, the qualified trends, it does look like it is going to get bought when it pulls back. And so then the question becomes where it pulled back to. I gave my subscribers today what I thought that might be, and we'll see how it plays out. But you've got to expect some sort of a retrace to shape up here pretty soon. Don't have any failures yet. You don't have it on the daily. You don't have it on the weekly. You're moving to some stretch numbers, but you still don't have it. Volume on the NASDAQ stretches higher as well. If we look at the NDX, same sort of thing, quad witching. Pull the NDX back, look at it over a swing point high there, change trend. If we go back to the NASDAQ itself and look at it on the weekly, NASDAQ over the swing point high. Also, it changed trend a couple of weeks back. Finally, if we move to the small caps, look at the small caps, same sort of thing, volume expansion, big long stretch higher. Small caps over the swing point high as well. Small caps trying to get back up to the top of the breakdown bar. And the small caps, like the NASDAQ, they're also doing a bearish retest regen. And they're just trying to get to this area, just like on that S&P. The S&P is trying to get to the higher one. So this is the corollary on the S&P here on the Russell. You have the higher swing point low, the lower swing point low. S&P has already cleared that and is trying to get to this. It gives you a sense of how much difference there is between these indexes. That's the wrap here with respect to the domestic markets. Let's take a look at the overseas markets. And we start here in Asia, in particular starting with Shanghai. Shanghai busted over 2 swing point highs. Volume escalated on Friday. That move suggests that it is going to move up for the next swing point high and then probably into these big bars on the downside. So Shanghai looking up. And why is that? Part of it is, of course, the loosening of credit over there has been going on for a while, past 2 or 3 weeks. Part of it is the fact that the U.S. Fed has decided that they are going to ease versus being strict with money, and that helps Asia, hurts Europe. So we have the move up, volume expanding, and we're probably going to see that across Asia no matter where we look, whether we're looking here at Shanghai, if we look at the Hang Seng, for example, if we pull that one up and take a look at it, all of these markets are going to benefit from U.S. easing, and they're going to go back and do their bearish retest regens in most all those cases, and some of them already started, right? So here's this one, for example. Here you're into it, you're going to try to get to the other side. If we look at the one that's going to be hurt, that's going to be the Japanese Nikkei, and Nikkei pulls back. That's going to have a tough time given the strength of the yen comparative to the dollar. If you look over in Europe, it's the opposite case, and that is that the euro is going up. So far, it hasn't had much of an impact other than the fact that when you see Asia rising, you're seeing this one stagnate at these highs, and it's going to have a hard time. If we look at those currencies right quick, let me pop up the OX markets here. If we look at those currencies, in particular, if we go to the dollar, you know, the dollar's already risen about 3.5, 4, or not risen, but dropped about 3.5, 4%, I guess. What is it, 20? It's a buck. Yeah, it's about 4% off the top, right, straight down. So you break a swing point low, and now given, you know, the extended move, this is an extended move, right? When you're looking at this, you have this, you know, angle of descent that's fairly extended. You didn't get a reversal signal. You may still get one, but it does look like it's going to probably try to get back in here, whether it goes down first and then comes back or not. And it can go down first because you've actually got this big target down here at the bottom. So you got a bunch of swing point lows on the weekly here. You've got this one as well. All of those still holding up, still waiting on test, and that test is getting down there now. I suspect it will hold this big volume low, but it looks to me like this range now on the dollar is coming all the way to the lows, and with that doing what it's doing, of course, that's going to help Asia. It's going to hurt Europe as the dollar presses down into the lower part of this range. Now, if the dollar does come back to retest and regen, odds are it will get bought, but that's another buck down. Actually, it's about $1.50 down from here. And if you're doing that you're talking about another 4.5%, 5%. So if it's going to get down there, the first thing it's going to have to do is break the range. Given how far and fast we've already come, I suspect this range is going to hold for now, and then we'll see if it wants to come down farther later. I don't expect you're going to see that kind of a violent move off this first move down. The place that you're going to get maybe violent moves is going to be the oil market. Now, the oil market, if you look at the fundamentals, they're starting to turn against the oil market now. I mean, they've been, you know, huge inventory builds, You're actually starting to see the rig counts try to change. I think this is a place where you may see the surprise. You had an over-under, less volume. That's true here. It was also true on the WTI. Actually, on the WTI, you actually had a doji. So we'll see if that's going to try to flip back around and pressure back to the downside. And finally, before we leave this, we were talking about the euro. The euro is not nearly as much trouble as you see in the dollar. And so what I would do is pull this back and look at it. You know, the euro actually has a swing point high up there, quite a bit higher. The meat of the range on the euro is this area right in here. And so just like the dollar, if the euro wants to push up and test that top, while the dollar on its chart is testing the bottom, that's going to be the key area. You would expect they would stay in this range for now. But if this does break out and we see this start pressing to the top, you're going to see pressure on European equities, and by proxy, that should put pressure on our equities as well. So to wrap this show up, put a bow tie around it and hand it to you, what you have is you have a market that yet has given off any kind of a clue that it's going to fall back, right? It's been a straight up rise, 11% to the top side, volume on Friday. You know, you've got, actually, if you want to be bullish, you'd like to see it not even test Friday's high and just come on back. Do some consolidation, right, and then make the run up there again. That would be the ideal case for the bulls. For the bears, you actually want to see it come up here and test it, right, and fail. Get over it, get under it, 2-bar reversal. You've got the extension, you got everything you want. You could get a deeper retrace off of something like that. You could even come back as far, you know, as, say, a swing point high. Whether it does that or not, that's a different story. But, you know, the gist here is that you've got a big stretch. All measures suggest, you know, given this kind of stretch, given the angle of ascent, which is one of the things we do with neoclassical, is what is our angle of ascent? That is not a sustainable angle, just as this wasn't a sustainable angle, right? You're going to get bounces off of it. You're going to get pullbacks off of these. That's just the way it works. So I'll leave you with that thought for tonight. And of course, I'll be here all week. We'll see what she wants to do. Have a great one. Take care, and I'll see you tomorrow. Good night.